Good afternoon, everyone, and to kick us off this week, I'm going to be exploring a beaten up gold market and I'm going to be giving my opinion on where it could be heading for March. Now, the price action does not read well for this commodity, but there are signs that the fundamentals are improving. And so in this video, I'm going to run through these events coming up. It's going to really decide the fate of this commodity for March. Then I'm going to move on to the technicals, where we have sunk to around $17-20 per barrel. That's a 20% decline off of its all-time highs. And I'm going to be making a case for a big move in March. So, what is wrong with gold? Now, everything seems so rosy up at $2,076 per barrel. That was in August of 2020. Since then, this market has shredded 20%. Now, what is the reason for this minus 6% we saw in February, which is a huge drop? Now, we had this rise in US Treasury yields, I'm sure you may have heard about, and investors are seeing this opportunity to earn better interests on treasuries. So why would they want to invest in these non-interest bearing metals? Now, some analysts are even saying that gold's best days are behind them. What's even more surprising is how much it is lagging behind other commodities. Now, over the past weeks and months, raw material prices have been rising to multi-year, in some cases all-time highs. I think last week copper, the red metal, is at its highest level since 2011, only 6% off its all-time high. Do I believe this is all going to continue? I'm not sold. The answer to me is no. I believe there's a rally coming, and we have some really key fundamentals we need to look at for March. And we're at a critical stage of the pandemic now, and there is a potential pattern emerging from the 2008 global financial crisis. Now, while the financial crisis and the COVID pandemic, they're very different events, right? We know that. But the response in terms of monetary and fiscal policy has been similar, if not the same. Now, the only difference is that in 2020, the response was the level of liquidity and the stimulus was far higher, and it's the same for 2021 as well. Now, from June through to September 2008, the US Treasury borrowed a record $530 billion to fund the stimulus, right? In May 2020, it borrowed $3 trillion, so you can see the difference. Fast forward to the next stimulus program that's coming in imminently, it's likely to push the US deficit to over $30 trillion. Now, after these measures were introduced in 2008, the mere 530 billion, commodity prices soared, even with a much lower level of stimulus. Now, why should we expect any different reaction from the markets, if not more, considering the stimulus packages we have coming up? Now, I'm holding out for a much more positive month for gold. We also have dollar. We know that gold is dollar denominated. Rising long-term interest rates that we've seen, it should be supportive of the dollar, but we know the Fed's stance is to keep interest rates extremely low, and this leads nicely into the speeches that we have coming up. Federal Reserve Chairman Jerome Powell, he's going to be speaking about the economy along with other officials hosted by the Wall Street Journal on Thursday. They're going to be giving their thoughts this week on how well they expected the recovery to fare from COVID-19. Now, what to listen out for? If they can signal a little concern over the impact of higher yields on the recovery, this should mean a flooding of investment flows into gold and helps build our bullish case out nicely. Okay, so I'm looking at the chart now. Starting on the daily chart, just wanted to quickly point out, I drew in this descending channel, I had this marked out already. These all-time highs we had in August and the slump down to 1730 we're actually at a positive day at the moment for gold, which is we've had 5 days of negative price action. So this is the drop we had, and we've actually now started to form this descending channel. Price at the moment is at the bottom end of this channel, and so if you like to trade off of something like this, we could be looking a bounce up to around 1880. What I'd like to do more than anything is I'd like to actually get rid of this. I'd actually like to look at levels back from June 2020 where we had this massive upside, levels that weren't actually tested. Now, we did have this really key, I just want to mark it for you, bring it across. This was a key daily order block at the time. As you can see, we violated it in November. We came back and we've broke back through it. This could be seen as a as a resistance level around 1790 if you're looking for sells. What I'd like to point out is maybe another untested area from June. We've nearly touched it at the moment. If I actually highlight this as our daily order block, potential floor of the market, and bring that across. So this is a really key support level that I would like. We did have this impulse from this order block which broke this structure here. If I mark it for you, it broke this high here for us, so we can say this is our daily order block. What I'd like for price to do, which we've nearly done, is go and test this order block, and it actually sits at a nice psychological level as well at 1700 flat. If we reach this reach this level, we could be looking at a swing hold for the month. And if you wanted to aim for maybe the resistance level that I marked previously, we're looking at around a 3.6 R trade. Not too bad. If I remove these drawings, I'll keep the floor in there. I'll go down to something maybe like the 4-hour chart, and yeah, I'm a price action trader. I trade what the price is telling me, and at the moment the price action is bearish, right? We're making lower lows and lower highs, and so I do want to mark out, even though I am bullish for it and I'm expecting a better month, I do want to highlight a potential selling opportunity as well. So what we've had here, we've had this break of structure, a break of this low, market as our market structure. So we had the break of this low here. Now where did that move start from? It started from this candle here, and what you can see right now is price running up and testing this level. This would be our 4-hour order block. So what I'd like in my situation, I've got these levels marked out, right? So I'd like price to, if I just draw it on, there it is. Price potentially to run up into our 4-hour order block, which would be nice. A nice selling opportunity down into our floor of the market, our daily order block, our 1700 psychological level. Then I'd be looking for a more long-term buy. So at the moment, on the 4-hour, I'm not necessarily looking for buying opportunities, but there's a potential sell into our key level, which wasn't quite tested yet, and then we can be looking to hold for a much higher level. And if I incorporate this in with maybe our relative strength index at the moment, just to see kind of where we're at, as you can see, we actually approached oversold territory, which is quite rare for gold. We haven't seen that for a while, all this action here. So if we was to get this bounce into this 4-hour order block, it would actually represent more of a fair value, and the market is bearish at the moment, and so we could see a drop into our psychological level, which on the relative strength index would be testing this 30 level for our relative strength and potentially oversold. So we're actually lining up two potential opportunities here, guys. If I go onto the 1-hour chart, I'll remove this drawing, and you can see that this 4-hour order block can actually be condensed into a much lower level, and this level would mean a selling opportunity at around 1750, and if we can get 1750 and get our take profit target of around 1700, we're looking at a 7R trade, and then as we know our take profits are there, and then we can start to look to buy from this psychological level where I am expecting a bit of a bounce. So these are the key levels that I'm noticing. I just want to go back to the daily chart and just see where we're at in terms of our 50-day moving average. Price does tend to respect this level quite a lot, especially on the daily chart. So 50-day. So as you can see, we're actually trading quite far away from our 50-day moving average at the moment. I'd expect price to come up and test this 50-day moving average at around 1812 before I'll move to the downside in terms of moving average. On the relative strength index, you can see here we're actually at oversold territory at the moment. Now, what I would like the market structure to do here is to fail to create any more lows. If we can fail to create any more lows, then we can almost scrap the ideas from before and we can start to look for buys straight away. At the moment, you can see this low here at 1764 has been broken. So from the price action, we need to just be looking at sells from the short term, but looking for evidence for a change in trend shift for our buys. That is it for today, guys. If you could drop any comments, your opinions on gold for March, that would be great. I am bullish for it in terms of the fundamentals. I'm looking forward to what the Federal Reserve say this week. We have NFP, non-farm payroll, on Friday as well. If you turn on your notifications to these videos, guys, you actually catch these videos as soon as they come out, the latest price action. And I'll be doing another video next Tuesday. Share this video with anyone who you think would benefit from it. And of course, likes and subscribes are always appreciated. Thank you very much, guys, and I'll catch you all for the next video.